Thank you. I would consider Rick Rule probably one of the best investors of our time. And he's been a great mentor for me. And I like how he thinks, pragmatic. He always says he likes to invest in projects or commodities where it's not a question of if something will happen, but a question of when. And for him, uranium is certainly one of those. He thinks a question of time, and many others do, that uranium prices go higher. And reality is the average mine around the world is going to cost $40 to $50 cash costs, and therefore needs $60 to $80. So right now we're at 22. There are more reactors being built today than at the time of Fukushima. This is the highest number, 2018. But the spot price is so low that Cameco has shut down the richest mine in the world. It'd be like imagine the gold business and someone says, I only got 15 ounces per ton of gold. 15 ounces of gold. I can't make money. That's how low uranium prices are right now at $22. We're in Canada where the grades are at 10, 20 times higher than the world average. But even there, where Cameco is based, the prices are simply too low. But Cameco is shutting down. MacArthur has. That's about 18 million pounds being taken out of the market. And our overhang in our industry is about 15 million pounds, so it's just enough to get rid of it. We'll start to see the impact of that. Those of you who follow Cameco stock have seen it risen almost 40% in the last couple of months. As most of you know, stocks tend to run before the commodities. And I noticed even last night, the commodity price jumped another 50 cents. Legal stuff. It's a very unique project, PLS. For a long time, you seem to, if you wanted a really high-grade deposit safe jurisdiction, you came to Canada. However, the challenge was mining these deposits. Somebody has said, like mining in a milkshake, and that's why Cigar Lake, took an extra 10 years to put in production. And however, then Africa had these great assets, but they were low grade, but close to surface. What Ross and our team has found is a project that actually ticks every box off. It is in Canada, in the Athabasca, where they got 60 years of mining. It's only 50 meters from surface. 50 meters. Got a lake about 3 meters above it, and in basement rock. We don't have to worry about all the water problems that Cameco has had, because we are actually not in the basin, just a couple of kilometers out, and the glaciers have wiped off the sandstone. And that's why there's not an award this project hasn't won, whether it's Mining Journal for the best project exploration of its time, of that year, but not because it was uranium, but all commodities. Rick Rule's gone on record saying maybe the most significant mineral discovery in 30 years because of the grade, close to surface, in a great jurisdiction. Ross has won a number of awards, we both have, because it's a very unique, freak of our time project. If you invested with us when Strathmore started, today you can look in your account and find 4 different uranium companies. A lot of people talk about it, we'll build it, someone will buy it. Well, we've done it. We've got some projects for 100 grand. Eventually that went to $500 million in market cap. We took out the Canadian assets. We brought in Sumitomo into Strathmore, built it, spun it out, took some assets in Canada, brought in Korean Electric Power Company, made a discovery, developed it, sold it to Denison. We took another property out of that group of assets and started Fission Uranium around it. And so we are the two amongst the largest shareholders in the company. And so that's we just continue to build shareholder value. And we need luck on your side, but what really helps is to have people believe in you and keep giving you chances to put drill holes in where nobody else would. It also takes a very unique idea. Like everybody, if you're in the industry, uranium, everybody said stay east in Canada. That's where the big projects are, MacArthur. However, our team said, look, let's not believe what everybody else said. We went and tried a few different things, and sure enough, we found some boulders, followed those up, and that's where we have our discovery today. As I mentioned, it's high grade, shallow, and we have a PA, and we should have a pre-feasibility done this year. People talk about cars, electric cars, they talk about cryptocurrencies. Well, one thing they both have is you need a lot more energy. And every year, the slide keeps changing. They used to say, it's 75% more. Now it's 100, now 150% more. The cryptocurrency world already, back in Christmas time, was using enough energy for the country of Macedonia, I think, 51st in the world. It was just insane. And it's going to continue to rise. So demand. There's everybody on here, you'll see, everybody always sees India and China, but look at Saudi Arabia, United Emirates. They want to get to 20% of their mix to be from nuclear energy. And also the supply is from some pretty areas where things can go wrong very quickly. And that's why you could have a radical change in the prices. Over £1 billion have not been contracted in the next 8 years. £1 billion need to be contracted. Fukushima didn't drop demand for uranium. It changed the way contracting was done. Traditionally, especially the Japanese, would be 5 to 10 years out, and now people have become very short-sighted and they go 1 to 3 years. And so they said, well, why tie up our assets or commitments? The other reason is uranium is a very small part of running a reactor, so it can go to 80 or 100, and it won't even touch the debt costs of building a reactor. Now, most of you in this room would say, if you like a stock, you buy low and you sell high, right? I think most of us, not the utilities, they like to do it the other way around. This red line is the spot price, and this is all the contracting. So you can see they like to wait till the price is nice and high and make sure they go out and contract 3 times as much as they do at the bottom. But it also causes gluts and famines. That's why I think you can see a very, it's a Canadian term, hockey stick, move in. I think when the Kazakhs talked about dropping their production, our stock went up 50% in about 3 days. And so there aren't many good names in the space. That makes it easier for investors somewhat. That's a nice sunny day in China, and it hasn't gotten any worse. I was just there a few weeks ago, and it's just awful. Anyways, as you can see, our partner is the mothership of the industry, CGN. They spent $2.5 million in due diligence before they gave us $82 million. They looked at every project in the world in the basin before they chose us as a partner. And they've already got 19 reactors. They're going to 23. They want to get to 20% of their power come from nuclear, just like America. This is the middle of the country, right in the middle, basically. This is what they call the Athabasca. This little line around here is kind of like all the deposits inside the yellow portion would be called unconformity deposits. It's where you've got sandstone touching hard rock, and because of all the water, it precipitates. Anyways, it's high grade, but our project's actually on this side and a little bit here. This wonderful road was built for Cluff Lake when Riva had a mine up there. It runs 365 days. We have some pretty decent infrastructure up there. I think like those who have been to it, you can fly into Fort McMurray and less than 45 minutes later, you're on our property. Again, why we love Canada, grade, grade, grade. Why does it matter if it's shallow? These are all the deposits in the basin, and this is the depth. The gray ones were mined out. The green ones are found but not. Correlation is, if you're shallow, you're going to get mined out first. The other great advantage of us having a shallow deposit is that there's more than one buyer for us if we sell. If I have a deep deposit in the basin, I believe only Cameco is capable technically of taking it out of the ground, therefore only one buyer. That one advantage we have is anybody can open pit. Can take us out. It's a pretty big, like I said, the footprint's pretty large. We've lots of room to explore, and we'll continue to do so, but one thing we don't want to do is raise money at the bottom of a market. So we've got about 30-odd million in the bank, take us out a couple more years, at which point we don't have any debt. The number of options open to us. But we hope for the best in our business always, but we plan for the worst. And that's how we've taken our approach, moving everything forward towards drilling. This is what the open pit would look like. Those of you like techies, you can come by and see all the colorful pictures. The last thing is we've done a PA, and you can see it will be amongst cheapest in the world. Now this was built on 100 million pounds model. We have now 140 million pounds. Also, we would share a mill. And in this model, we have to have our own mill. So I think our numbers are going to get better in our pre-feasibility. We're covered by a number of analysts. Like I said, we're cashed up. I love our team. If you have any questions, please come by the booth.